What's up, traders? What's up, millionaires? I hope you guys are having an awesome day. So I recently did a video about the top prop firm for 2025, and the reason why I made this video was because you guys already know I have traded with more than 50 different prop firms. I have gotten more than $500,000 in payout, and I have documented everything on this YouTube channel. So that qualifies me to give you guys that top one prop firm, which if I have to choose one, I would definitely go for that one. That video went super viral, and there were a lot of comments on the comment section. People were asking, okay, now you're giving us the best prop firm for 2025. How can we pass the challenge? How can we get payouts like you? How can we also be on the success list? And today, there you go. When you talk a listing, I'm going to be giving you guys the top secrets on how to pass your prop firm challenge and get payouts. So if you're someone you've been buying challenge and blowing, changing strategy to another, wondering if the prop firm is a problem, if the strategy is a problem, if your mentor, don't worry. On this video, I'm going to be debunking everything, and I'm going to be telling you guys all the steps, the nitty-gritty, the ins and outs on how you can pass a prop firm account with live examples coming up right now. What's up, guys, and welcome back to my channel. For those of you guys who are watching me for the first time, my name is Godlove, and I've been trading Forex for 10 years. I started this YouTube channel with one goal: to give it back to the community and to impact others. And it has become the biggest YouTube channel in Africa in the niche of Forex and in the niche of finance. So if you are new here, make sure you smash that subscribe button below to subscribe to the channel. If you're watching me and you haven't subscribed, make sure you also subscribe to the channel. So after seeing all those comments, I was so excited, and I took my time almost a day to put all my resources together, and I prepared a presentation which I'm going to be sharing with you guys. So get your pen and paper and get a cup of coffee, and let's get started. So if you can see on the start of my presentation, it's simple: unlocking success when it comes to prop firms. So proving secrets, that's what I'm saying, proving, because I'm going to be showing you guys all the secrets. Proving secrets to pass prop firm challenges and securing payout. My goal by the end of this video is not only to show you how to pass prop firm challenges, but to show you how to secure payout. Now, what are we going to be covering on today's video? Like I said, make sure you take your pen and paper and take note on everything we're going to be mentioning on this video. So obviously, I'm going to make sure you understand what prop firm challenges are. I'm going to make sure you develop a winning trading plan. What is a trading plan? We're going to talk about, a trading plan encompasses a lot of things. If this is your trading plan, this circle, then inside you have your trading strategy, you have your trading psychology, you have your risks management, you have your money management. So a trading plan encompasses a lot of things, and people get it wrong. A trading strategy is just part of your trading plan. So we're also going to talk about that, and we'll talk about mastering risk management. Whether you like it or not, is the approach you are using for prop firms that's going to give you an edge and secure and ensure that you are able to pass at the end of the day. We're going to talk about the psychological edge, staying disciplined and focused. What is the mindset you need to be able to develop? What's the psychological build up you need to have to be able to secure a payout when it comes to prop firm? We'll also talk about from challenges to payout, navigating the final step. What are the final steps? You guys are also going to see screenshots of the payouts I've received with barcodes you can scan, with all the proof, with podcasts I've been on and stuff like that. So that's also going to give you some motivation to tell you guys this works, and the steps I'm showing you guys on this video all work. Now let's talk about understanding prop firm challenges. You can't even pass a prop firm or secure payouts if you don't even understand what a prop firm is, or what prop firm challenges is, or how they operate. So let's talk about what is a prop firm overview, challenges, process, and funded account. Now I'm going to draw two boxes here, right? Let's say this first box is actually your broker. I'm just going to call it B. And then the next box we have here is actually what? Your prop firm. I'm actually going to call it PF, right? What is the bridge between a private broker and a prop firm? Until you understand this bridge and how they operate before you can even start thinking of how to pass them. Now, if I just start trading and I have $100, or let's just say I have $500. 90% of you guys watching this video can afford $500. Even if you just get a 9-to-5 job, you can easily afford $500. Let's say I have $500 and I want to start Forex trading. The first thing I'll do is seek for a strategy. Once I have a strategy that is working, what do? Instead of depositing that $500 in my private account, what will I do? I will deposit it in a prop firm, and I'll tell you guys why I am saying that. Then when I make money from a prop firm, I use prop firms to fund my private account. So what's a private account? A private account is just an account which you sign up with a broker. All prop firms use brokers, but a broker on its own is that intermediary between you and the interbanking system. Because you don't have billions to trade, you don't have millions to trade, you can't trade directly in the market. So what will happen is you need a broker that can bring those prices to you, and you trade them digitally or online. All right, so that broker is what we call B. And if you're someone who doesn't want to trade with prop firm, what you do is you actually take your own personal capital and deposit in that private broker. That's why if you check on the links on the video description, you see my recommended Forex brokers or my recommended private brokers. Those are brokers you need to deposit your own money. And bear with me, for you to make something reasonable in Forex, you need bigger account size. Meaning if you want to make something reasonable in your private account, you need to deposit from $10,000 to $100,000 before you can make something reasonable if you're going to be risking 1% or 2% of your account. But 99% of you guys watching this video can't just afford to deposit $100,000 in a private broker. 90% of you guys can't just afford to deposit even $50,000 on a private broker. So what do? Since you want to still live that Forex dream, you go with a prop firm. So a prop firm is going to come in. Now you know how to trade and you don't have the capital. The prop firm has the capital, but they don't know how to trade, or they don't have profitable traders. So what will happen? You guys come together and do what we used to call collabo, right? So you come together and you collabo. So you come together with your skills, the prop firm comes together with the capital, and then you trade for the prop firm for a shared profit. You can keep up to 90% of your profit. That's how, if you guys know my story, I was trained by a prop firm, by a hedge fund, sorry. I was trained by a hedge fund back in 2015. And the moment I became profitable, back then it was 50-50. It's not like today where you can keep up to 90% of your profit. Back then, you keep just 50% of whatsoever you've made. And if they say they are giving you an account to trade, it wasn't even called a prop firm account. It was called the PAM account, P-A-M. And if they are giving you that PAM account to trade, they deposit the money live and then they give you the lock-in details. You trade and you keep 50%, the hedge fund keeps 50%, because I didn't have the capital and the hedge fund had the capital. That was when I made my first money, to start scaling, to start now depositing in my private account. So that's the main bridge between a private account and a prop firm, and how a private account works and how a prop firm account works. Now, the prop firm account will be able to have something we call challenges. So that challenges, what is the reason for these challenges? Is to see if you actually have a proven system before they can give you their money. I'm just talking about the traditional system of prop firm, whether they are giving you live funds or simulated funds. I'm just talking about the traditional system. They have to test you to see that, you actually have the skills, that you're not going to just come and squander or blow their money. In some prop firms, in some very, very traditional prop firms, they even train you. They have the educational side of the prop firm where you come and they train you first. So since 99% of prop firms now don't have that educational aspect, or they are just interested in providing you the funds, they don't want to train you, all right? So you need to seek your own training, but they will need to test you to see if the strategies you have or the systems you have are actually working. That's why you need to go through that challenge process. When you go through that challenge process, whether we are talking about, phase 1, phase 2, and you actually show them that you have a strategy that is working from a systematic approach of passing phase 1, phase 2, what they do is they then give you a funded account. So that's a live account, that's a real account, that any profit you make from that funded account, you will be able to get a payout, what we call a payout. On your private account, you get what we call a withdrawal, all right? You get a withdrawal, while on your prop firm account, you get what we call a payout. So that's how it works, the bridge between a private account and a prop firm account. What are some common rules and objectives when it comes to prop firms? Some common rules, objectives, and constraints. Prop firms will have something we call profit target, which I'm going to explain to you guys. They will still have something we call maximum drawdown, which I'm going to split it into two. When it comes to maximum drawdown, there's maximum daily drawdown, we call it DD, and there's maximum overall drawdown, we call it OD. I'm going to explain all of that to you. There's something we also call trading period, and there's something we call allowed instrument. Profit target. There are some prop firms that offer 8%. Profit targets are always measured in terms of percentages. There are some prop firms that will give you 8% profit target on phase one. There are some prop firms that will give you 10% profit target on phase one. When it goes to phase two, there are some prop firms that will give you 5% profit target on phase two. There are some that will give you 3% profit target on phase two. Whatsoever percentage it is, you need to be able to achieve this target, to make this percentage on either phases before you can actually pass that prop firm account. So if we're taking Funding Pips, for example, which won the list as the best prop firm for 2025, and we are taking their two-step challenge. Remember, I'm going to also show you how you can sign up in a prop firm account. So if we are taking Funding Pips and we are taking their two-step challenge, which is just the Funding Pips two-step challenge, their phase one is 8%, meaning you just need to make 8% to pass phase two and to pass phase one. And their phase two is what? Their phase two is 5%. Meaning you need to be able to achieve this both target to be able to do what? To get a funded account. Whether we are talking about a $100,000 account, a $50,000 account, you need to pass both phase one and phase two to get a prop firm account. What if you pass phase one and fail phase two? You wouldn't get a prop firm account. What if you fail phase two? There will be no. What if you fail phase one? There will be no phase two to even talk about. What if now you pass both? What will happen? You will get a funded account, which if you make money on that funded account, you end up getting a payout. So that's how profit target works for any prop firm we are talking about, and specifically we're going to be talking about the best prop firm in the game, which is Funding Pips. Make sure you stay to the end of the video, because at the end of the video there's a huge discount for anyone who wants to train with Funding Pips, and there's also a free gift for you guys. Maximum drawdown, again, some prop firms have instant funding. Even Funding Pips also have instant funding. They have the one-step challenge and the two-step challenge. Instant just means there's no, there are no challenge phases, but the rules are very strict. I don't recommend instant funding for beginners. Please listen. The price is very expensive and the rules are very strict. It's very, very unlikely that you end up not getting a payout. I want you guys to not only know how to pass those challenges, but to end up getting a payout. So I don't recommend instant funding for beginners. Phase one and phase two, yes, some of them. If we are still taking again Funding Pips two-step challenge, phase one, daily drawdown, what do? The daily drawdown on phase one, you don't have to lose more than 5%. All right, daily drawdown is 5% of your account, while the overall drawdown is 10% of your account. Meaning if you are trading per day, let's just say the market doesn't go your way, which some days are going to be like that, don't lose more than 5% of your account in one day. If you lost more than 5% of your account in one day, you lost the challenge. Even if you are off in profit of 8% and you lost 5%, you lost the challenge. So if you see that the day is not going as planned and you've lost 4% of your account, stop there and wait for the next day. When you come the next day, you can continue, because you have only lost 4% out of the 10% which you are allowed to lose. If you come the next day, you still have 6% that you can recover from that challenge. I've actually had days where I lost 6% of my account, then or periods where I lost 6% of my account. Let's just say today I lost 3%. The next day I lost 3%. Then the next day I make 8%. The next day I make 9%, and then the subsequent day you see me passing the challenge. That is your ability to come out from what we call a drawdown. All right, a drawdown. So a drawdown is something you have as a Forex trader. So how can you come out of this drawdown? You can't avoid a drawdown. If you see a mentor, anyone teaching you how to avoid a drawdown, that person is just trying to scam you or sell you something. You can't avoid a drawdown. As a Forex trader, you can't control the outcome of a trade. So that means you're going to have drawdown. What is your ability to come out of that drawdown is what determines whether you're a profitable trader or not. And to come out of that drawdown is also what I'm going to be teaching you guys on this slide. Then trading period. Let's go trading period. Back in the days, like maybe even early 2019, 2020, they used to give you, pro firms used to give you 30 days to pass that challenge. If you don't pass the challenge within 30 days, you lost the challenge. They'll tell you you've lost it. But now 99% of pro firm is unlimited. It's unlimited. You can trade on the pro firm as long as you want. So that's just called trading period. You can trade so long as your account is still active and you're trading on the account. But bear in mind, there's an inactivity period. You can't just buy a pro firm account and just keep it and forget. You must be able to take a trade in that pro firm account within 30 days. If not, you breach the inactivity rule. So that one is a rule I seldom even talk about, because you can't even buy a pro firm account which you're not going to trade on it, which you're not going to open a trade on that account for 30 days, all right? So that's lessly talked about in the industry. Then there's one they call minimum trading days. So what does minimum trading days stands for? It's just MD. Minimum trading days is just the minimum number of days you need to trade on that account before you can go to the next phase, or before you can be given a funded account. So if you're taking again funding pips, for example, they have a 3 days minimum trading days. Meaning if you buy that account on Monday and you just do what they used to call full pot, and you pass the same account, you make 10% of your account or 8% of your account on Monday and you pass the challenge, you are not going to be given phase 2 on Monday, all right? Or even if you were trading on phase 2 and you passed it in one day, you're not going to be given the funded account on Monday. You need to wait for Tuesday and Wednesday, at least 3 minimum trading days before you can be given that funded account. Within the 2 days that are left, let's just say you pass on Monday, within the next 2 days that are left, the next day you can just come and open the minimum lot size in the whole Forex industry. It's 0.01. You just come and open, wait for like a few seconds, you close. Then the system will mark as if you've traded for that day. You come the next day again, you just open the list, 0.01. You wait for like a few seconds or 1 minute, you close the trade, whether it's in profit or not. Now the system has registered that you actually waited for 3 days. You've traded for 3 days and your next phase will be given. So that's how the minimum trading days work. There's no maximum trading days. There's no max. We have unlimited trading days. And then allowed instruments. You know, we have under allowed instrument, we have FX, we have indices, which the funding pips do offer all of these. So we have FX, we have indices, we have crypto. So most of you guys who trade crypto, you can still trade crypto. There are some pro firms that offer crypto. There are some pro firms that offer synthetic indices. All right, there are some pro firms that offer synthetic indices. There are some that offer precious metals like gold. Funding pips also offer precious metals than gold. So when you're planning, when you're coming up with your plan to succeed with pro firm, you need to also take into consideration which asset you're going to be focusing on. Are you going to be strictly focusing on Forex? Are you going to be strictly focusing on indices or metals, or you're just going to be best all around like me? I trade everything that produces a candle in the Forex market. All right, that's why you must have noticed on our VIP Signal community, which you can get access using the link on the video description. On that VIP Signal community, you will see a signal on Forex, you will see a signal on crypto, a signal on indices, a signal on metals, meaning whatsoever trader you are, you will be able to find a signal in our VIP Signal community, which you can find the link on the video description. After that, let's talk about the comparing popular pro firm challenge requirement. We've talked about target profit metrics. You need to be able, different pro firms set varying profit target goals for their trading challenges. Understanding this helps traders set realistic objectives. We've already covered that on the previous slide, so we're just going to brush over that because we already used funding piece, for example, and we use their 2-step challenge, and we mentioned that on phase 1 you need to pass 8%, and then phase 2 you need to pass 5% before overall you are given a funded account. Drawdowns, I've already explained in detail again how drawdowns work, and we have 2 types of drawdown, which is daily drawdown and overall drawdown. You are not supposed to breach any of these drawdown so that you don't lose the challenge. Challenge time frame we've also spoken about, and we say we have unlimited time to trade, but we do have minimum trading days, which even if you pass the account in 1 day, you still need to wait for those minimum trading days. So we're not going to take much time on this one. Let's talk now about developing a winning trading plan. Now, I'm going to come out with this, my circle again. Hopefully, I'm able to draw it. With this circle, if this circle represents our trading plan, this is our trading plan. Inside a trading plan, what do you have? You have a trading strategy. a trading strategy. So you have another small circle inside that circle, which is trading strategy. You have trading psychology. Trading psychology starts with P. So you have another circle inside that represents trading psychology. You have money management, all right, inside that. You also have risk management inside a trading plan. All of this encompasses your trading plan. If soldiers are going for war, I like to always use this example. If soldiers are going for war, they will need a war plan. In our case, we call it a trading plan. In that their war plan, they will say, okay, if let's just say traders are going from, let's say, okay, American traders or American soldiers are going to Afghanistan to fight. They will say, okay, in their plan, they will need to say, okay, you need to understand Afghanistan is a very hilly country. The topography is very, very difficult. So we need to be able to mount some of our launches at this particular area. So those launchers they are talking about, those are strategies they have to use. Those are strategies they will need to use for that particular war, which is part of their war plan. They will need to also talk about the culture of the people. What is the cultural factors they need to be able to consider? The cultural factors, the atmospheric condition of the place. The place is very, very dry. It's very, very dusty. Most of their cars won't be able to work. So they need all of that is part of what? Their war strategy, their, cultural factors, psychological atmospheric factors. All of that is part of their war plan. The same thing in trading. When we're talking about trading strategy, money management, trading psychology, risk management, all of that is part of our trading plan. Then setting realistic target and risk management strategy. So let's achieve, how do you set achievable profit target and also risk management rule? I've seen a situation where traders will just follow a video on the internet and they see one guy just full potting. Full potting is when you are trading with a full margin. And they will come and use the same system with their pro-firm challenges and they wonder why they are not getting a payout. Let me tell you guys, the best way to trade with a pro-firm is not how fast you are able to pass the challenge, but how long you are able to keep your funded account once you are funded and how sure you are able to trade on your challenge accounts. That's it. It's not how fast you pass the challenge or how fast you are able to get a payout. There's even nothing like how fast you are able to get a payout. So even when you get funded, the faster or the more you are leveraging, you still need to wait for maybe periods of days. Some, like the funding pips, you can choose weekly, you can choose bi-weekly, or you can choose monthly, meaning you still need to wait. So I'll advise you to go with a consistent way of trading, the consistent approach, because it's not how fast, but how sure you are trading. It's not how fast you pass the challenge, but how long you are able to keep your funded account. I have some of my funded accounts that I've been trading on for more than a year. So my funded account with pro firms that I've been trading on, those funded accounts for more than a year. You won't do that if you're coming with a full potting, the full margin trading approach. You won't be able to have that. So that's what I'm talking about. Have achievable profit target and also risk management rules. So on our achievable profit target, I'll advise for you to be able to easily pass a pro firm challenge or trade consistently. I'll avoid, go for 1 to 2, maximum 2% risk per trade. Just stick in Godlove University, which is my Forex Academy. Those of you guys who want me to mentor you one-on-one, you can check out the link below and you enroll in Godlove University. Most of these strategies or these systems, I personally teach them in Godlove University. In Godlove University, no trader takes a trade by risking more than 1%. But I'm just giving you guys the general rules, which stick to 1 to 2% of your account. Don't follow all this noise on the internet, someone risking 4%, someone saying, oh, I risk just what the pro firm, if the pro firm can offer me 5,000, I risk even 5% of my account. Don't follow that. Don't follow that. That's going to work for like 1% of those advanced traders, but for you, the typical beginner, it's not going to work. So stick to 1 to 2% of your account, and then stick to, if you're risking 1% of your account, stick to 3 to 5 trades per day. All right? Stick to 3 to 5 trades per day if you're risking 1. And then if you're risking 2%, stick to 1 to 2 trades per day. You see, it makes sense, because if you're risking 1%, 3 to 5 trades per day means you are risking 3 to 5% of your account per day. Meaning, even if all these trades don't go your way, you won't breach your daily drawdown, all right? And then the same thing, if you are risking 2%, stick to 1 to 2 trades, because if you are risking if you are taking 2 trades, it means you are risking 4% of your account. Even if all those trades don't go your way, you all be down 4%, and that won't breach your daily drawdown. And again, remember, we are talking about achievable profit target. Again, so long as you are sticking to 2 to 3 to 5 trades per day by risking 1% of your account. If you then have what we call a buffer, all right, a buffer, then you can take more trades. So what is a buffer? Let's just say in one day I took a total of 4 trades. I'm going to explain how a buffer works, right? I took a total of 4 trades and I had two winners, or let's just say I had 3 winners and 1 loser, because most of my strategies have a win rate of 50 to 70%. So let's just say I have 3 winners, so 3 winners, and I'm going for a risk to reward. Risk to reward, I've already explained risk to reward. Risk to reward just stands for the percentage you get for each percentage you risk. So if I'm going for a risk to reward of 1:2, it means for every 1% risk, I'm going for 2% profit. That's how it works. So if now, within that day, I had 3 winners, it means I had 3 times 2%, which was equal to 6% of my account. And 1 loser was just 1 times minus 1%, which was equal to minus 1%. So the net for that day was equal to what? Was equal to plus 5% for that day. Even though I had losers, I still ended the day with plus 5%. Now, the most important thing is, even if I had a 50% win rate, which 2 of my trades were winners and 2 were losers, I would have still ended the day in profit, because those winners, I would have just made 2 times 2, 4%, and losers, I would have lost 1 times 2 minus 2. So my net for the day would have been plus 2%. So you see, you don't even need to, to have more than a 40% win rate with a risk to reward of 1:2 to make money in Forex trading. Meaning, just with a 40% win rate on any strategy, you will still end up making money, you will still end up passing your challenge. So all of that is encompassed under having proper risk management and achievable profit target. Because with this edge, with all of this edge right here, with all of this math we just did, you can already see realistically that even if I'm having losers, I already have at the back of my mind that my system is having an edge. I already have at the back of my mind that my system is having an edge, which will allow me to make profits at the end of the day. Let's talk about choosing the right trading style. When it comes to trading, we have different trading styles for different traders. I'm all rounded. It just depends on the time availability I have. If I don't have much time at my disposal, that day I'm going to be a scalper. If I have much time and if I have more time at my disposal, that day I'm either going to be scalping or day trading. If I don't have more time at my disposal, like maybe sometime I'm traveling for events, for seminar, or for vacations, or I'm on flight, what will happen? I will be doing the swing trading, or even sometimes position trading. What does all these trading styles mean? It's a scalper. So a scalper is someone who opens and closes his trades between seconds to minutes. So if you open and close your trades from seconds to minute, then you are actually a scalper, all right? And what is a swing trader? A swing trader is someone who opens and closes his trade between more than 8 hours to days. So if your trades are open and closed between 8 hours to days, there's some time my trades used to be open for 3 days, for 2 days, for 4 days, for 5 days, then it means I'm a scalper. It means I'm a swing trader. Then if I just open my trades and close within minute, maybe after 15 minutes, after 30 minutes, after 5 seconds, after 10 seconds, after 2 seconds, that is any person who opens his trade and that trade is closed between seconds and minutes, it's a scalper. Then an intraday trader is someone who opened his trade and closed within that same day. So most of you guys, 80% of you guys watching this video are intraday traders, meaning you are either trading on the 1 hour time frame or the 4 hour time frame, and your trades are open and closed within 1 day. An intraday trader can actually move to a swing trader, meaning if you took that particular trade on the 4 hour time frame, and based on the volatility in the market, you didn't hit your target quickly, and then that trade moved to the next day and the next day, what happened? You've moved from an intraday trader to a swing trader. As a Forex trader, you just need to be flexible. you can come into the market some days and you say, okay, today I'm going to be a scalper. And you find out that maybe some of your trade, you took maybe a trade on the 5-minute time frame on, say, CAD JPY. And now that trade is been there for 2 hours and it's not hitting your target. Remember, you have already crossed from being a scalper that day to an intraday because your trade wasn't closed within minute. So now you were an intraday trader for that particular day. You might come into the market some days and say, okay, today I'm going to be an intraday trader. And then you open a trade on the 1 hour time frame. You put your target, let's just say you are targeting 200 pips on Euro USD and you are risking 100 pips. That trade, the market can consolidate for days. The market just keeps consolidating for days and then your trade has gone to the next day. At that point in time, you become a swing trader. So I always like to emphasize that as a trader, you need to be very flexible. Take the market for what it is, not on what you've already planned before coming to the market. Because just from this example, you can see you wanted to be a swing trader and then you ended up being an intraday trader. You wanted to be an intraday trader, you ended up being a scalper because your trade was closed within seconds. It just depends on the volatility in the market and also the time frame you are using. So as a base rounded trader that will allow you to easily pass pro forma account, you need to be flexible and understand how different time frames work and how all these trading styles work. Let's quickly talk about a sample trading structure. So on a sample trading structure, what are we going to be talking about? We're going to talk about the trading strategy because that's why I'm still talking about a trading plan. So a trading plan structure, which is what we spoke about earlier, is still that our magica. It's still that our magica circle, where if we call that this circle our trading plan, then inside here we'll have our trading strategy, we'll have our risk management, our money management, our trading psychology, and all of that. All of these small circles is part of what? Is part of our trading plan. So obviously, trading strategy. What is your trading strategy? Trading strategy just defines the approach and methodology. The approach and methodology. I like this. What is the approach you're going to be using? You're not going to enter. I hate when I see traders are in the trade and they keep DMing their friends and asking, should I close? Should I add more position? Should I move my stop loss? What was your plan before you get into that trade? What was your plan? That's why they used to say, trade the plan and plan the trade and trade the plan. All right? Plan the trade and trade the plan. What was your plan before you got into that trade? What was your approach before you got into that trade? What was the methodology before you got into that trade? That's why I like the approach and the methodology for making their trading decision based on market analysis. Then risk control. Include method to manage potential losses and protect capital through stop loss orders and limit. It's very, very important. Here we're going to talk about what? Stop loss and limit. Whether you like it or not, never trade without putting a stop loss, no matter where you are taking your advice. One of the most successful investors out there, Warren Buffett, his popular quote he used to always say, it's not how much you make when you are right, it's how much you lose when you are wrong. Show you that capital preservation is very, very important when it comes to trading. That's what I'm saying. Risk management, it includes method. What are the methods you're going to use to manage potential losses and protect your capital? You're protecting your capital. There are some losses you can't avoid. You can't control the outcome of a trade, but you can protect your capital, meaning you can protect potential drawdowns. Then entry and exit rules. What are your entry and exit rules? Talking about a trading strategy, which is what we spoke about earlier. What are some rules which if you see in your trading strategy, that will tell you to enter or exit? For example, we're going to take our popular strategy, GUMVRO. On that popular strategy, we have two moving averages, which is the 10 exponential moving average, and this one is the 23 exponential moving average. Anytime we have a cross of the 10 exponential moving average crossing over the 23 exponential moving average, that's a buy. We buy right here, meaning what do we have here? We have clear criteria that are telling us when to enter into this trade. This will now, if we call this our E, what is the criteria to exit? So if I enter here on a buy, maybe my stop loss, I just draw my stop loss can go somewhere here. Maybe my stop loss is there, and then I'm going for a risk to reward of 1:2, meaning my TP can be here. You see, so now my criteria criteria for exit is that, okay, I'm going to go for a risk to reward of 1:2 based on what I'm risking on that trade. So this area from here to here, this stop loss here is going to be my risk, and my TP will just be 2 times my risk, 2 arrow. That's a risk to reward of 1:2. So you can see just for my strategy alone, I already have clear entries, clear criteria that are telling me when to enter a trade, clear criteria that are telling me how to exit, and I also have in my strategy clear risk control, which I'm talking about risk to reward. I'm talking about momentum control. All of this, if you didn't watch that video, or if you haven't watched that video about GUMVRO, if you check on TikTok, we have hundreds of traders on TikTok, even here on YouTube, who are making money, getting paid out on a daily basis. You can see even in my private community, this is a student who is getting paid out using strictly GUMVRO. On TikTok, many of these testimonials are too many of traders who are making money using strictly this strategy, which I've just given you guys like the facet, or just like, you know, just like the tips of the iceberg of it, all right? But watch that video, check my channel, you're going to see that video. It's called the GUMVRO strategy. Watch the video, and you'll be able to understand the strategy. That can be your main strategy, because that's the flagship strategy in Godlove University, all right? When you go to Godlove University, we have 2 flagship strategies, the GUMVRO and the GUORB. So those are strategies you don't play with. But all of this is going to be what? A sample trading plan structure. So this is going to comprise my sample trading. Then review process. This is very, very important. I almost left this one out. Review process is the regular assessment of trading performance to ensure discipline and continuous improvement. So here we're going to talk about what? Trading journal. So trading journal, what's your trading journal? Your trading journal is there to document your process. If you're someone who is not yet, if you check my office, you will see books everywhere. All these books, you see all the pages are full. Everywhere is written on the page, because those are trading journals. If I even check my office, just looking down here, look here, you will see this is 2017. This is a trading journal from 2017. You can look. That's it right there. That's a trading journal from 2017 telling you guys every year I document, even to today, I document everything I do in the Forex market. My trading affirmation, that was in 2017. You can see that those are the affirmations I used to read to myself on a daily basis. And today they become a reality. So nothing happens in trading by accident. You need to be able to do what? Have a review process, which part of that review process is your trading journal. On your trading journal, you'll be able to document your winners. You'll be able to document your losers. From your winners, you'll be able to know what you need to do next time to be able to succeed. So your winners will help you to be able to max up. Your winners, your losers will be able to help you to learn. I used to always tell traders, there's nothing like a losing trade in Forex. It's either you learn or you earn. If you place a trade that doesn't go your way and that trade is a loser, you will learn from that trade. Lessons I learned in 2019 from my $10 loss are the same lessons I'm using today to make $10,000 in one trade. Lessons I learned in 2015 from my $5 loss, when I lost that $5, then I went and I learned, I said, okay, I'm not supposed to do this, I'm not supposed to repeat this, are the same lessons I'm using today to make $5,000 in 1 minute. So in Forex trading, there's nothing like a loser, there's nothing like a losing trade. You either learn or you earn. Then if that trade goes your way, obviously you're going to earn from that particular trade. That's what I'm saying. It's either you learn or it's either you earn. So a review process is something you must have. Document all your trades. Why did you get into that particular trade? What were the psychological traumas you went through? Did you violate your rules? Did you follow your rules? Did you go out of the trading plan? What were the targets? You can even take screenshots of the trade so that you can always go back and you see where you need to be able to improve. You see where your strengths are so that you can leverage your strength, and you see where your weaknesses are so that you can improve on your weaknesses. So that's what we call our review process. And all of this is going to give us what? Our trading plan. All of this, that's the structure of our trading plan. Let's talk about what you guys have all been waiting for, which is risk management. Mastering risk management. You can see this is a popular game I used to play with my wife. Even sometimes when we travel like a family, we always play this game right here, where you need to be able to pull the brakes very, very carefully. It's the same thing in trading. This is how risk management works, because it's brick by brick. There used to be a meme that says, I build this brick by brick. All right, it's the same thing in trading. You need to be able to build your trading career brick by brick. So how does risk management work, or how do you have proper risk management when it comes to trading? That's why we're talking about calculating optimal position size and leverage, risk to reward position size, and calculating position size according to your predefined risks per trade relative to account size. Avoid excessive leverage. So talking about risk management, I'm just going to quickly share something on TradingView with you guys, so that you can see step by step how you can manage your risks when it comes to trading. How you can even calculate. Some of you guys have asked, so what lot size should I use? What leverage should I use? I have a $10,000 profit account. What's the lot size I should use? I have a $100,000 profit account, and I'm trading Great Britain Pound USD. I'm trading gold. What's the lot size I should use? So don't worry, I'm going to show you guys step by step. Let's quickly go to TradingView so that I can show you guys. All right, so we are here on TradingView, and I'm just going to give still again. If you can see here, it says GUMVRO. Like I said, if you haven't watched the video I made about the strategy, make sure you go and watch that video, right? All right, so here on TradingView, I'm going to just use this strategy, GUMVRO, to show you guys a typical example on how you can manage risks as a profitable trader, on how you can manage risks that will allow you to win in prop firms, that will allow you to pass your prop firm challenges. Good. Let me just clear everything on the screen so that we can be able to start at fresh. Let me just remove all the drawings, and then what I'm going to do replay trading. Let's do replay trading from here. Let's do it from here, and let's just assume we were in the market this day and we started looking for opportunities to trade, right? So let's just go ahead. Remember, replay trading it shows you what would have been happening in real life. It shows you what would have happened in real life. So let's just go. We are looking for, with GUMVRO, once we have stuffs like this, I'm just going to show you guys. If we have a cross like this, where the fast moving average is crossing over the slow moving average from above, what will happen? That's a sell signal. And then the opposite will happen when we have a buy signal. Then when we are already in a trade, we draw our fibs from most recent high to most recent low, and this would have been another entry on gold. We are doing this on gold. But since we started trading here, we are looking for the next buy signal. So let's continue and look for the next buy signal, right? Let's continue going, and then we'll look for another buy signal. So our buy signal is just going to be when we have the cross. Remember, when we have the cross. So let's go. Okay, the market is beginning to perfect. Okay, didn't cross. The cross wasn't confirmed. I need to be able to. The cross needs to be very, very visible. Needs to be very. Let's see what happened with the next candle. Perfect. That's a cross. That's a cross. That's a cross. A very, very clear cross. Meaning here, we'll enter as a buy on this. We'll enter on a buy somewhere here. This is how you trade. You need, everything is mechanical and methodology. What is your methodology? Remember, I did mention that. What is your approach and your methodology? So this is our approach and our methodology with this strategy, right? So if I'm entering there, I want to risk, let's just say, this is gold. So I want to risk, I want to risk 180 pips. This is 180. So if I'm risking 180 pips, I want to go for a risk to reward of 1:2, meaning I just keep dragging. You can see here it says risk to reward until I see risk to reward of 1:2. That's it. Or maybe I can even give my trade room to breathe. I can risk, say, 300 pips. This is gold. Gold can move for 1,000 pips in a day. So I can risk 300 pips and go for a risk to reward of 1:2. Boom. That is it. That is it. That's a risk to reward of 1:2. Now, what lot size? Remember, you need to be able to know the lot size you will use on this particular trade so that you can only risk 1% of your account, if assuming you want to risk 1%. So how do you calculate that lot size is what I want to show you guys. You need 4 things to be able to calculate that lot size you can use on this trade. Number 1, I'm just going to write it here. Number one, you need to know the asset you are trading. Okay, I need to change the color from that to red. Good. So you need to know the asset. These are the 4 things you need. You need to be able to know the asset you are trading. So in our case, that asset is gold, which is XAUUSD. You need to be able to know the account size. The account size. So let's use, for example, let's just say you are having a 100K Profam account, right? 100,000 or 100K. You need to be able to know the lot size, the stop loss in pips. Stop loss in pips. So in our case, our stop loss in pips was 300 pips. 300 pips. And then you also have to know, so you need to know the account size, you need to know the asset, stop loss in pips, and the percentage risk per trade. So in our case, what is our percentage risk per trade? We are risking 1% of our account. So long as you have all these 4 things, you are good to calculate. Now, what is the lot size? Lot size is what we don't know. So we need to now calculate the lot size, and you can't calculate it in your head. This is more like advanced stuff of trading, and you need a calculator to do that. So for calculator, we've already done it for you guys. Just go to Godlove University, click on position size calculator. Just type there Godlove University. It's the first page on Google, Godlove University, or you're going to see the link on the video description. Go to Godlove University and you can see here, it's right there, trading calculator is right there. Godlove University trading calculator, or just write Godlove University, which is, well, that's where you get Payouts Pro, you get my Forex course and all of that. You get a signal service. You can even book one-on-one on me. So just go there and click on Forex calculator. When you click on Forex calculator, you can see here, we have this area where you can just fill your details. You can come here, you fill your details. They'll ask for your email, obviously. Just input your email and the Forex calculator will open. Here you'll be able to fill all your details and then you'll be able to calculate. But the advice, if you come here and this one is under maintenance, because since we're dealing with live quote, sometimes you can come and this section doesn't work. What do? Just click here. It's right here. Just come. When you come here, just click here to use alternative calculator. So you click there, it's going to open on a new page, and that's where you'll be able to calculate your lot size. So here they're asking for the currency pair. Let's just fill the details. It's obviously going to be gold, which is XAUUSD. Account currency is USD. Account balance is 100,000. That's 100,000. Risk per trade is 1%. And stop loss in pips is 300 pips. Now, when you're calculating for gold, it only happens for gold. When you're calculating for gold, you put this in terms of points. So 300 pips is equal to 3,000 points. So you put there 3,000 points. That's why if you check here on Trading View, if we click here, it was 3,000. All right, 3,000. Any other asset you put in terms of pips so that you can get the answer correctly. But for gold alone, on this website, for gold alone, you put it in terms of points because a pip is 1/10 of a point. So once you've already put all of this, remember all of this is representing the same thing we had here. All of this. We had our currency pair, we had our account size, the pips, the amount of stop loss in pips, but there you put in points, the risk per trade, and the lot size. When you put all of that, all you do is you just click on calculate. That's it. Just click on calculate, and it means this is the lot size you need to use on this particular trade, 0.3. Now let's calculate to see if amount at risk. See, amount at risk, you need to be able to confirm amount at risk is what? $1,000. If you come here, let's just say now you put 300 and click on calculate, you can see it's going to show you 3.3 lot size. So make sure you put there in points and 0.3. Let's do some math to confirm if our answer is correct, right? For gold, if the market goes up by just 1 pip, you lose or win $10 if you are using one lot size. But since we are using 0.3, it means it's going to be 0.33 times 10. All right, 0.33 times 10. And if we multiply this by what was our stop loss distance, our stop loss distance was 3,000 pips, which was 3,000 points, which was 300 pips. If we multiply that, we can see that's 990 because we rounded it up. All right, it would have been $1,000. So that's approximately $1,000, meaning this is the correct lot size. You see, if you didn't put it in points, you would have gotten something like 3.3 lot size times 10. Times 10, it would have been this. If you multiply this by the stop loss, which was 300, you see you're going to be risking about $10,000 on that trade. You're going to be risking 10% of your account instead of 1%. So that's why I say you need to always put here in terms of point. If you're trading with gold, I'm going to show you guys another example with any other asset, and then there we'll put it in terms of pips. So the lot size we need here is what? Is 0.3. Most of the time I just round it down to 1 decimal place. If this one was above 5, then I'll say it's 0.4. So this one is just 0.3. After you've calculated and you've gotten your lot size, what do? You just go back to MetaTrader 5, and where it says lot size, you put it there and then you press on buy and you modify your stop loss and your take profit. Let me show you guys. All right. Now you can see this is my MetaTrader 5 right here. This is actually a funding pips account. That's it right there, funding pips, and this is actually phase 1. I just need to make 8% on this account to be able to pass. I'm already up with almost about 5%, as you guys can see right here. So what do? This is gold. I just come here. What was the lot size we got right there? The lot size was 0.3. That's it. And when we buying or selling, we just click down on buy, and then you can just come here, you right click on the trade, you go to modify, and here you can put your stop loss in points. Here you put 3,000, and then your TP is 6,000. That's it. And you click on modify, boom, and then you have a trade. I think I'm actually going to buy this one. Let me just show you guys for the sake of this video. I think the market is actually in a good buy position. So I click on buy. You can see that's my buy trade right there. Then I just right click on the trade and I go there and I go to modify. On modify, what do I need to do? I just put my stop loss is going to be 300 pips, which is 3,000 points. And my TP is going to be 600 pips, which is 6,000 points. Click on OK, and boom, that's my TP, that's my stop loss right there. That's it. That's a trade up and running. Maybe by the time we finish the video, we'll actually come and check to see the profits which are running on this particular trade. But whatsoever it is, we'll come back to the video. I just wanted to show you guys how you then place the trade after setting your target. So let's quickly go back here. Let's just minimize this. And then, so that is it. That's how, because you can see with this approach, you are able to know each lot size you can use on any trade. And for this particular example, let's continue now. Let's continue to see what actually happened. After that, if we did hit our TP or not. Look, can you see that? Can you see that? Can you see that? That's the market going in our favor already. Let's see. Okay. Let's see. Let's see. Let's see. So let's see. We are almost hitting our TP. We are almost hit. Boom. TP hit. You can see that was our TP hit on this particular trade. With this strategy, once the TP is hit, you need to look for another entry. And to look for another entry, now we use the Fibonacci tool. The Fibonacci tool will need to run from the most recent swing low to whenever we have a most recent swing high and the market start pushing against us. So we just need to go down until we have our most recent swing high. So let's just click here and then click on the screen. Let's keep going until we see the market start pushing against up like really harsh, and then we're going to use that as our most recent swing high. Okay, that's it. So that becomes our most recent swing high. So our Fibonacci is going to run from here to here. If the market can push to our 38% level and then close bullish, we're going to be taking another buy trade. So let's just put that nicely. And we can see the market already pushed down to our 38% level. And if this candle closed bullish, we're going to be taking another trade. So let's see. Let's click on the screen. Let's go. Let's go. Perfect. So this would have been an entry right here. That would have been another long position. Our stop loss would have been there on 300 pips again, and we could have gone for a risk to reward of 1:2. Okay, 1:2 would have been here. So you just go and calculate the lot size again. It would have already been in this trade. So if we continue playing, let's see what happened with that particular trade. We almost hit our stop loss, but we didn't. Let's see. Boom. TP is hit. So those are two trades, two winners in a row. 4% of our account already made if we're risking 1% to go for 2%. So that is the methodological approach I use anytime I'm trading. Let me check one example on Great Britain Pound, Great Britain Pound USD or any other asset. The only difference is if you go to the trading calculator, let's even cancel replay trading. Let's cancel it. If you go to the calculator to calculate your lot size, this one you actually have to put it in terms of pips. not in terms of points. You only put in terms of points if you are trading gold. Any other asset you put in terms of pips. Meaning if I'm entering this trade somewhere here, let's just say I wanted to buy, let me show you guys an example. Let's say I wanted to buy Great Britain Pound USD there, and my stop loss was supposed to be 25. You can see here it's in terms of pips, 25 pips. In terms of pips, and I was going for a risk to reward of 1:2. I would have just gone on the 2, and then what would I have done? I would have come here and select Great Britain Pound USD. Great Britain Pound USD, account balance is the same, we're risking the same, and here I'll put 25 pips. 25 pips, not 250, 25 pips, and click on calculate. Voila, it means the lot size I would have used on that trade with my account size of $100,000 would have been 4 lot size. Would have used 4 lot size on that particular trade. If it goes my way, I'll make $2,000. If it doesn't go my way, I'll lose $1,000, which is 1% of my account. This then brings us back to our calculating optimal position size and leverage. I've shown you guys the importance of risk to reward, how to calculate your risk to reward, how to calculate your lot size. I've also shown you that. I've showed you guys how to calculate lot size for each specific account. From after today, no matter the account size you're trading with, you won't be asking me again, Godlove, what lot size can I use for a $10,000 account? What lot size can I use for a $15,000 or a $100,000 account? I already told you guys the 4 things you need. The account size, you need to know the percentage risk per trade, you need to know your stop loss in pips, and you need to know the asset you are trading. With these 4 things, you will be able to now calculate the lot size, which is the same thing we spoke about there. Now let's talk about leverage. Pro firms do give you lower leverage. Any leverage between 1:20 to 1:100 is good for Forex. For indices, any leverage between 1:10 to 1:50 is good. And for gold, any leverage between 1:10 to 1:50 is also very, very good. Avoid over leveraging. Just the fact that that leverage is there doesn't mean you have to use it. Leverage is a two-sided sword. If you make a mistake and you are over leveraging, your account will go in a split second. But if you know what you are doing and you are using leverage, you can still make a lot in a split second. So that's why I'm saying leveraging is a two-sided sword. Let's quickly talk about implementing stop loss and take profit effectively. I've just shown you guys already everything I showed you guys on TradingView was talking about stop loss purpose. So what is the purpose of a stop loss? Stop loss limit potential losses by automatically closing trades at preset levels. So you put your stop loss, you are telling the market that, okay, I might make a mistake. The market there are outcomes. You are telling the market that there are outcomes I can't control. That's the reason why you use a stop loss. By saying, oh, there are outcomes in the market I can't control. I can be trading Great Britain Pound USD and Donald Trump just come and say, China, we're increasing tariffs, and boom. The market, instead of going up, will instead go down and hit my stop loss, or instead go down and I blow my entire account. What will prevent that is a stop loss. And the reason why I said there are outcomes in trading you can't control, I just gave you guys fundamental reason. If you are trading Great Britain Pound USD, those are 2 economies involved. The Great Britain Pound economy is involved and the United States economy is involved. If something has to happen in the United States, it's going to affect that particular currency pair. Fundamentally, it's going to affect the currency pair, and you had no control over. You had no control whatsoever on what Donald Trump was going to say. You didn't even know he was going to say that, and that is going to be affecting your position. That's what I'm saying. You can't control the outcome of a trade, but you can control how to manage your risks, which is why you use a stop loss. So a stop loss is a no-brainer. You have to use a stop loss on all your trade. Then take profit. Now you're telling the market that take profit, secure gains by closing trade once a target price is reached. Now, I don't want you guys to suffer from what we call greed. Greed is what you guys suffer. Most of you guys suffer. You've set your TP, take profit, and then even when the market hit that TP, you start on the sideline and start saying, if I was still on this trade, if I was still on this trade, bro, you will never take it all. You will never take all the money from the Forex market. You will never take all the pips from the Forex market. So long as you've hit your TP, hit your chest and say, I've done a great job, even if the market has to go in your favor again for 1,000 pips after that, Don't worry yourself. Don't be a greedy trader. Also, you got another version of greediness is when maybe you enter a trade here, your TP is somewhere up here. By the time the price is here, you go and start trying to push your TP up, trying to push your TP because you just enough is not enough for you. You just want more from the market. And what will happen? The market goes against you and then hit your stop loss right down here and you lost the trade. What was your approach? What was your methodology? You were already trading against your trading plan. Never for once violate. That's why I used to always tell you guys, anytime you lost your trade, ask yourself, was it a justified loss or an unjustified loss? What is a justified loss? A justified loss is a loss you followed everything in your trading plan. You followed all the rules in your trading plan. You didn't mingle with your stop loss. You didn't micromanage your trade. Micromanaging your trade was what I was just explaining here, where you start going to push your stop loss. Once you've already taken the trade, place your stop loss and take profit. Walk away. Never try to micromanage. Don't try to micromanage your trade. It's wrong. You're not going to win that way. Don't try to micromanage your trade. Once you've already pressed buy or sell on any trade, before you get into that trade, you have already predefined the risks. You've already known that, oh, if this trade doesn't go my way, I'm going to be fine to risk $1,000. If it goes my way, I'm going to be fine to make $2,000. Don't touch anything on your stop loss. Don't touch anything on your TP. Let the market do its thing. Let the trades run. Let the market do what it has to do. So that's what I'm talking about. Micromanage. Don't micromanage your trades, please. All right? So that's what I'm talking about. If you ask yourself, was it a justified loss? A justified loss is the one you followed everything on your trading plan. But if it's not a justified loss, it's the one you started violating your trading plan. You started shifting your stop loss, or you started shifting your TP, or you started adding more positions, or closing your trade early and stuff like that. That is when it was an unjustified loss. Which, if it's an unjustified loss, you need to be able to beat yourself up because you'll never be a profitable Forex trader by taking unjustified losses. If it's a justified loss, anyone and every Forex trader can have a justified. I have justified losses on a daily basis, on an hourly basis, all right? But I'll just see it and I'll just laugh because I did follow my trading plan. I did everything. I ticked all the boxes on my trading plan, but that trade still ended up as a loser. So I'll just smile and walk away because I know with my plan I have an edge. The few winners I have will still be able to cover all the losers I have had. The same thing with winners. Anytime you have a winner, you need to ask yourself, was it a justified winner or an unjustified winner? A justified winner is a good one. It's the one you followed everything on your trading plan. Let's just go back. A justified winner is the one you followed everything on your trading plan and then it ended up as a winner. Voila! You can celebrate that trade. But if you have an unjustified winner is just as bad as a loser because you can't repeat the same thing tomorrow. It was unjustified. You weren't following your trading plan. You already changed everything that was on your methodology and your approach, and then you just got lucky. I don't believe on luck when it comes to trading. I don't believe on luck. You just got lucky on this trade and you're not going to be lucky tomorrow. So that's why if it's an unjustified win, you need to just even forget it was a winner. Go back to the drawing board and see what you did on that trade which you're not supposed to do next time because you are just lucky. You're not going to be lucky tomorrow. So it's either it must be a justified loss or a justified win. If it's a justified loss, you don't need to blame yourself. If it's a justified win, you did a good job. If it's an unjustified loss or an unjustified win, you don't need to celebrate. You need to know that's what is going to keep you at that circle of doom for years upon years because you keep breaking your trading plan. We already spoke about take profit rule. We already spoke about risk management. Then avoiding emotional decisions. Emotional decision is just part of greed. Greed, you're already in the trade, and then you go on the internet, you see everyone is talking about how they made a risk to reward of 1:10 on this trade. They made $10,000. Now you're going again, you're changing your stop loss, you're moving your TP. You're already on the trade, and maybe you see someone talking about another asset. Now you're suffering from FOMO. You run and you're going to open when it wasn't even part of your plan. All of that is making emotional decisions. You are just trading emotionally. Let me tell you guys why a monkey can be a better trader than you. A monkey can be a better trader than you because that monkey is risking money. that money to that monkey, this money to a monkey doesn't mean anything. All right? This money to a monkey means nothing. You need to be able to understand. So if the monkey was actually risking his bananas, trust me, that monkey wouldn't make any money. Because by the time the monkey press buy and sell, and then the market is just up by one banana, the monkey will start getting excited. If the market is down by one banana, the monkey will start trading emotionally. The monkey will start trying to close that trade early, or maybe trying to move the stop loss, or try. No. The monkey won't care if it's money. The monkey will make a lot of money. The monkey is going to be very, very profitable, because what is the monkey doing? The monkey is just following his or her trading plan. The monkey is just following the trading plan meticulously and religiously. If I see this, I buy. If I see this, I sell. My take profit goes here, my stop loss goes here, and that monkey is going to make a lot of money, because the monkey doesn't have any emotions involved. But when it comes to real money and with humans, that's your hard-earned money. Emotions are going to be involved. That's when you start trading with emotions. That's when you start asking yourself, oh, this is money I just borrowed from my wife. If this trade doesn't go my way, I'm already losing $100. I'm already losing $200. I think I need to close. I think I need to move my stop loss. Or if the market is already up by $200, oh, this is $200 I'm already making. I watched a TikTok somewhere and someone was saying, oh, I didn't have $200 on my account yesterday. So why not close the trade if I'm already seeing $200 in profit? Then you run and go and close, which was a potential trade which you would have made $1,000. You would have made $2,000. You are trading emotionally. You are not following an approach or a method. You don't have a methodology or an approach you are following. And what is making you to trade emotionally is this money. That's what is making you to trade emotionally. So you need to be able to completely detach yourself monetarily from that particular trade. Completely detach yourself. More money will come in trading. Let me tell you guys something. More money will even come in trading when you don't even need the money. When you are trading as if you don't need the money. The moment you start trading with pressure, the moment you start trading because you need to trade to survive, you need to trade to pay your hospital bills, you need to trade to buy your mom's medication, bro. Not even the little you have will be taken away from you. Forex trading likes people who are trading as if they don't even need that money, who are trading as if they don't even care about that money. That's when the money is going to come. So you need to be able to do what? Avoid all emotional decisions, which is what I just explained. Just to tell you guys how risk to reward is very, very important. Let me show you guys a chart again, which is demonstrating risk to reward in practice. So impact on profitability. Different risk to reward ratios significantly influence overall profitability in trading. Because there's a concept about the risk to reward which you guys always have it very, very wrong. I have traders who have risk to reward of 1:1. I have other traders who are all profitable. I'm talking about profitable traders who have risk to reward of 1:2. I also have a set which have risk to reward of 1:3. Then I have majority who have risk to reward of 1:2 infinity. Meaning you see someone having a risk to reward of 1:10, 1:20, 1:50. There are traders like that. Mostly like position traders. They open like one position on gold and then they just hold forever. Those are position traders, right? So in that case, all different traders have different reasons why they're doing that. But ideally, I'll advise you stick with 1:2 at the start. You can only increase your risk to reward or drop your risk to reward when you are already profitable. Now you already know the ins and out of the market. You know that asset you are trading very, very well. And again, something that will be able to determine if you make money using any of these risks to reward is now what they call the win rate. Win rate is very, very important. If I'm using a risk to reward of 1:1, it means I must have a win rate of 50%. That's it. If I'm using a risk to reward of 1:1, I must have a win rate of 50% to be profitable. Because if I take 5 trades and I'm risking 1% to go for 1%, if I lost 5 and win 5, it's break even. It's break even. So I didn't make anything and I didn't lose anything. All right? So you need to be able to have a win rate of 50% and above, 50% and above, before you can make money with a risk to reward of 1:1. Risk to reward of 1:2, which is what I recommend. You just have to, your strategy just needs to have a win rate of 40% and above. Even just 40%, you make money. Now let's do some math. If I take 10 trades and I have a win rate of 40% and I'm going for a risk to reward of 1:2, it means I'm risking 1% for every trade, right? If I have a win rate of 40%, it means only 4 of my trades were winners and 6 were losers. Losers, it means I lose 6 times minus 1. I lose 6% of my account. But how much did I make for winners? I made 8% because 4 times 2%. Anytime I had a winner, I made 2%. So I had 4 times 2%. So I made 8% of my account and I lose 6% of my account for that day. So what is the net for the day? If I subtract what I lose from what I had as winners, it will be 8% minus 6%. So I ended the day with what? With plus 2%. I ended the day with plus 2%. So you see how important having a good risk to reward and sticking to it is important. You don't even need to have a win rate of 50%. Meaning someone who comes to Johnny's office and most of Johnny's trades will be losers. Most of Johnny's trades will be red and they will start laughing and say, oh, Mr. Godlove has been trading for 10 years and he's still here. He's on YouTube speaking, but I saw all his videos were almost red, but I'll just smile. I will still smile because I'm making millions. I'm making a lot of money. Because of what? Because of good risk management, because of the good risk to reward I'm using, because of the edge I already have in trading. That's overall, that's called having an edge in Forex trading. So win rate of risk to reward of 1:2, you just need to have a win rate of 40%. Risk to reward of 1:3, you just need to have a win rate of 30%. 30% and above, and you still be making money. Then 1 to infinity, that one, it depends on the trader itself. Most of the time, I just stick on 1:2, 1:3, and I make money all the time. I don't say I have winners all the time. I don't say I have winning trades all the time. I don't say I pass all my challenges, but I make money all the time. Meaning at the end of the day, I'm able to make money. If I lost 2 challenges and pass one and I make $10,000 on that challenge, I don't care because I made more than what I even invested. It's called the return on investment. You need to see trading as an investment. It's called the return on investment. If I spend $2,000 on buying 4 100K profit accounts and I lost 3 and only passed 1, and in that one I make 10% of my account, I make $10,000, then it means I spent $2,000 and I've just made $10,000. That's how you see it when it comes to profit. And we're going to talk more on that, on coming out with the mathematical aspect of trading, of prop firms, scaling and that. I've taken $100,000 to $1 million and documented everything on my YouTube channel. That's because I had an approach I was following. And I want you guys to be able to do the same thing. Now, let's quickly go to the next step on our list, which is effect of drawdown. Remember, as I said, we're going to talk about drawdown. Whether you like it or not, if you're starting trading there are times you go up and then you come down. Go up again, come down, and then boom, you go up and you reach your profit target. So you obviously have a drawdown. Now, risk to reward ratio also affects the potential drawdown experience during trading period. If you're having a high risk to reward ratio, expect very, very deep drawdowns. Very, very deep drawdown. Because if I'm using a risk to reward of 1:3, the market can actually go in my favor for 1:2 first, and then retrace and go against me and hit my stop loss. So in that case, that's where you see people using trailing stop. You see people coming up with different risk management criteria to use. So the higher the risk to reward, the higher or the deeper your drawdown is going to be. Then strategy, design, guidance. So how do you design your strategy based on proper risk to reward? Understanding these ratios helps traders create trading strategies with more favorable risk to reward balance. I already showed you when we were talking about the example I demonstrated here, how you can have a balance, a good risk to reward ratio you can use on your profit account. A good risk to reward ratio you can use on any challenge. Good. I hope you guys are enjoying this mini course, because like I said, if after this mini course you are still not able to pass your profit challenges, you are still not able to get payout at the end of the day, then it will be like I wasted my time. And I've never wasted my time on this channel. I'm here to create millionaires. I'm here to impact lives. So I hope you guys are with me. All right. Let's talk about psychology. There's no way we're going to end this mini course without talking about psychology. There's no way. We need to talk about psychological edge. What is your edge? Staying disciplined and focused. Under our psychological edge, staying disciplined and focused is overcoming emotional trading and FOMO. There's a fear of missing a trade, which is called FOMO, and there's also the fear of taking a trade. It's called FOTT, fear of taking a trade. Fear of missing a trade is simple. You go on TikTok and you see everyone is talking. It's mostly very, very popular in crypto. You go on TikTok and you see one influencer is hyping one meme coin and you are scared you're going to be left out. The same thing even happened on gold. Gold was already up by almost $4,300 per 4,300 ounce, and many people started talking about it. In Vietnam, traders were even on a queue to buy gold. I'm going to check that video and show you guys. Traders were even on a queue to buy gold on Vietnam because of what? They were scared they would be missed out. They were scared, they had that FOMO, the fear of missing out. They were scared they would be missing out on the gold rush. Not knowing that the market occurs in circles. The market, what goes up obviously it becomes a point in time. There's something that an indicator we call the relative strength index, the RSI. The RSI is already indicating that we should be able to expect a downfall on gold. We should be able to expect a heavy retracement on gold. And psychologically, the market also works according to psychology. Psychologically, anytime the market gets to a level where you see traders start overcrowding themselves, not wanting to suffer from FOMO, the market used to crash. It has happened. It happens in 1970. It happens in 2021. If you check the gold chart, it has always happened with gold. It's not going to go up forever. And when you see traders start crowding like that, it normally tanks. You see the market tanking. All right, so that's FOMO, and it affects you as a trader. You need to plan your trade and trade your plan. Don't worry about any other thing, any other influencer is saying on the internet, any other guru is saying on the internet. Stick to your methodology and your plan. Don't suffer from FOMO. Fear of taking a trade is when you are not now confident. You are not confident on what you are doing. You are not confident on your system. You've done everything. You've studied the chart. You've gone through my mini course. I have a playlist even here on YouTube, which it took me 6 months to create, about 84 videos teaching you guys how to trade Forex A to Z. You've gone through that entire playlist. You've even enrolled in Godlove University. You've booked one-on-one with me. You've done all of that. Then when you see the trade in front of you, the setup has presented itself, you are scared to take the trade. It's called the fear of taking a trade, which I was the one that discovered that one. You won't see that one on the internet. I discovered that one within myself when I just started. I used to have that fear of taking a trade. It wasn't only FOMO. I used to suffer from the fear of taking a trade. So how do you overcome the fear of taking a trade? Number one, be confident in your system and know whatsoever you've learned is going to work at the end of the day. Number two, work in terms of probabilities and also treat trading as a game of probabilities. You're not going to have all trade winners. Number three, you can't control the outcome of a trade. Since you already know you can't control the outcome of a trade, who cares what happened? If it hits my stop loss or my TP, I don't care because I can't control the outcome of a trade. But I had a strategy, I had a trading plan, I had an approach, I had systems that told me to get into the trade. So why not believe in your own self? Why not be confident and pull the trigger? Be confident and pull the trigger. You only gain confidence with time. If you want to be an athlete or you want to be a muscle builder, your muscle will always start getting bigger or start increasing in mass with training, with experience. The same thing in trading. Your trading muscles will always start getting bigger. You start getting more confidence. By the time you keep pulling, you keep showing up, you keep taking those trades. So don't have the fear of taking a trade. You can't compare. You can't control the outcome of that trade. Pull the trigger and trust in your system to know that your system is going to give you an edge at the end of the day. Even if you have a win rate of just 40% at the end of the day, Johnny, you're still going to be making money. You're still going to be a profitable trader. You're still going to get payout. So don't overthink it. Don't overanalyze it. Pull the trigger. All right? So don't suffer from the fear of taking a trade. That's what they say. Recognize emotional trigger. What are some of your emotional triggers? All right, what are some of your emotional triggers? Now, this is it now as an individual. I want you guys to be able to let me know in the comment section What are some of your emotional triggers when it comes to trading? Identify fear and greed impulses. You need to be able to identify fear and greed impulses. For you to not also suffer from fear, have fear when trading, don't risk what you can't afford to lose. Don't borrow money to trade in the Forex market. Have something which is already self-sustaining you before you want to get into Forex trading. Don't trade Forex with pressure. Don't say, I'm just going to abandon everything and focus in Forex. No, at that point in time, you're going to be trading with pressure. Even the little you have, Johnny, is going to be taken away from you. Don't trade with pressure, please. Don't trade with pressure. That's why my book, Trading in Peace, is going to be released hopefully before the end of this year or early next year. And on that book is simple. The goal is to be able to allow you to trade in peace. Trading in peace. Your mindset, your peace of mind is very, very crucial for performance when it comes to trading. So identify fear and greed impulses that cause irrational trading decisions and disrupt strategies. Irrational. You see someone has planned to enter at this point. The person is having entry rules, exit rules, and then when the person is trading, you ask yourself, Daniel, why did you take that trade? Boom. The person can't explain anything anymore. The person wasn't following any rule anymore. So you need to be able to identify your emotional triggers like fear, greed, impulse that cause irrational trading decisions and disrupt your strategy. It means your strategy is completely disrupted. Then manage impulsive behavior. After you've identified those triggers, this is fear and greed is just two. Many. You guys, let me know your own fear triggers on the comment section. After you've identified those fear triggers, you need to now develop techniques to control urges. That means sometimes you are tempted. All right, urge is when you are also tempted. You are tempted to go against your trading plan. You are tempted to throw everything in your trading plan out of the window. So you need to prevent. You need to fight that temptation. I'm going to call it the urge, the temptation. All right. So you need to develop techniques. You can be the only one who can develop techniques to fight that urge, to fight that temptation, to chase trades or abandon plans to stay disciplined. So for you to stay disciplined, you need to control urges that will be able to cause you to go against your trading plan, and that will allow you to stay disciplined. Then you need to maintain rational decisions. We already spoke about irrational decisions. How do you maintain rational decisions? You focus on logic and strategy to achieve consistent and successful trading over time, all right? Focus on logic. There's a logic. Trading is just logic. It's probabilities. Trading is mathematical, it's statistical, it's logical, and it also just boils down to probabilities. What's the probability of this happening over me? And then what is the logic? If this happened and if I have this number of losers and this number of winners, am I still going to be profitable? Even if I blow this profit account and I win this number of profit account, am I still going to come up profitable at the end of the day? It's logic, it's mathematical, it's statistical, it's probability. That's trading. All right? That's what I'm saying. Focus on logic and strategy to achieve consistent and successful trading over time. It doesn't just happen overnight, it happens over time. All right? That's trading psychology. We're talking about trading psychology, which is something you need to do. Building routine. What do you need to do to be able to build routine? Trading sometimes is what I used to call insanity. You know, insanity is when you do something over and over and expect different results. In trading, it's the same thing. Today, there are strategies I founded maybe 2-3 years or 4 years ago that I'm just doing the same thing. When I open my chart, there's already something I'm looking for. And if I don't see that thing, I walk away. If I see that thing, I execute like a robot. That's why I write this down. Analyze like a pro and execute like a robot. Analyze like a pro and execute like a robot. When it comes to analyzing, follow all the steps I've given you and analyze your chart. Is it close? If you are using GUMVRO, has it crossed my moving averages? If it's yes, okay. If the market has already started going in one direction, has it pulled back to my moving averages? Did I calculate my risks very well? Did I calculate my loss size very well? Do all of that. Take your time to analyze, and then when the setup presents itself, execute like a robot. Execute like a robot. That's also going to prevent you from suffering from the fear of taking a trade, which I just explained earlier. So analyze like a pro and execute like a robot. So How do you build routines and healthy trading habit? Yes, trading is a habit you need to build. Consistent trading, profitable trading is a habit. It's a habit you need to build, whether you like it or not. And how do you build healthy, profitable trading habit? Then routine preparation. Start each trading day with preparation. Helps build discipline and readiness for market changes. You need to be prepared. Proper preparation prevents poor performance. They used to always give us these 5 P's when we were still in school to make us understand that whether you like it or not, nothing is going to happen by chance. You need to prepare for those opportunities. I don't believe in luck. What is luck for me? There's a different way in which I define luck. Luck for me is when opportunity meets preparation. If you are prepared for an opportunity, and then if you are prepared for an opportunity and that opportunity comes, everyone will say, oh, Godlove is lucky. Godlove was lucky on that trade. Godlove has been lucky throughout these years. Bro, it ain't lucky. It ain't luck. It ain't luck. There's no luck in trading. If you are prepared and that opportunity comes, that's when you'll be able to look in front of everyone as if you're lucky. But you were not lucky. You were just prepared. So for me, you need to be able to start every day with preparation. Start each trading day with preparation helps build discipline and readiness for market changes. So you need to be able to prepare. What assets am I going to be trading? What is the risk to reward I'm going to be using? What percentage of my account am I going to be risking? You also check maybe if you are trading on a prop firm, which is what we are talking about, what are the drawdowns on that prop firm? If I'm risking 1% and they are giving me a daily drawdown of 4%, it means I can only take 3 trades today. If it's a daily drawdown of 5%, it means I can only take 4 trades today, so that even if I lost all those trades, I'm not going to breach my daily drawdown. So you start the day with that preparation so that it can help you build discipline and readiness for market changes. You are ready for any change. Nothing caught you by surprise. You are ready. Then regular review. This is when we talk about our trading journal again. I've already explained trading journal in full when we're talking about preparing to succeed or with your strategy. So we also spoke about the trading journal. Consistent review of trade improve learning and strategy refinement over time. By going through your trade, let me tell you guys something. Just the fact that your strategy is working now doesn't mean that strategy is still going to work a year to come. It's still going to work even a month to come or even 2 years to come. You need to be very, very flexible as a trader to know when your strategy has become obsolete, to know when your strategy is not more working, or to know when you need to be able to tweak few things on your strategy for it to still work. Those few tweaks can just be maybe changing maybe the risk to reward, or maybe changing, the risk per trade, or maybe you're over risking, or maybe you even need to change the prop firm, or just you need to know when you need to make tweaks on your strategy for it to still stay profitable. So as a profitable trader, as a profitable prop trader, you need to be very, very flexible. And then journaling, I've already told you guys the importance of journaling. There's a software I created, which I normally give in Godlove University. All right, in Godlove University, there's a spreadsheet I created. It's more like a software, which on that spreadsheet, bro, it's detailed. You can be able to do, I think I should be able to share with you guys on examples on how you can be able to build a good and a solid trading journal. Then we're going to come back on the importance of rest. All right. So let's just go back and I'll show you guys that trading journal. What you are seeing here is a trading journal like you've never seen before. That's what you can see on the title. It says Godlove University Complete Trading Journal. This is a trading journal for all Godlove University students. They have access to this. And bro, this is a trading journal which anytime you go through this trading journal, if you use this trading journal consistently for 2 months, whether you like it or not, you become a profitable trader because it forces you to follow your rules. It forces you to follow your rules, and it also gives you the data. It presents the data in front of your face to say, okay, this is the data. This is where you need to improve. This is where you need to leverage everything. Let's go through the trading journal so that you guys will understand what I'm talking about, right? So, for example, we just spoke about, I show you guys an example on gold, XAUUSD, right? And let's just say we took the trade today and we took the trade at 12 past 12, right? It can be any time. And the currency pair, just coming here, you choose the currency pair, you drop there, and you just take on XAUUSD. That's it right there. That's the currency pair. Time frame, what was the time frame we're using? We're using the 1 hour time frame. Trade, was it a buy or a sell? It was a buy. Account balance. What's our account balance? 100,000. You just put 100, automatically it's going to add the 1,000 on it. What was our loss size? 0.33 or 0.3. Stop loss in pips was 300 pips. It's in pips. Our take profit was what? 600 pips. Can you see risk to reward was 1:2? Hey, very nice. I just like documenting my trade because you see risk to reward on this trade was 1:2. And then risk per trade, we're risking $1,000. In terms of dollars, it's $1,000. Let's continue. Let's continue. The trading journal gives you it's a software you won't see anywhere. Then trading session, obviously we took the trade during the London session. Market condition, it was a trendy market. And then trade results, remember we backtested and it was a win. Meaning you feed all these details and then you just wait after the results, you come and feed all these details. You end here after you've gotten the result, either a win or a loss, because you can see it's either a win, a loss, or in progress. If it's still in progress, I'll just leave it there. So that if I can see all my trades that are in progress, I can see all my trades that are winners, I can see the one that is loser and all of that, all right? So since this one was a win, I changed to win. So let me just leave this one. Anyway, let's leave this one the way it was. Let's leave it the way it was. Good. So what was the profit on this trade? We made profit percentage. We made 2% of our account. That is it. Dollar amount, we made $2,000. That's it. What is strategy use? I just write the GUMVRO. So you write the strategy use. Emotion during the trade, you know, I was calm and followed my rules. So for you need to be truthful to yourself. If you didn't follow your rules, if there's something, if you suffer from FOMO or from the fear of taking a trade or any of the emotional traits I've explained, then you can always write it. What were some of my strengths? Some of my strengths were just discipline. I was very, very disciplined. I was disciplined. I was focused. You know, I was disciplined. I was also very, very focused, and I respected my rules. Respecting your rules is a strength. I respected my trading plan. Respecting your trading plan, like I said, is a strength. What were some of my weaknesses? Obviously, as a trader, you obviously have some weaknesses. Maybe part of my weakness was that I checked my trade too often. Like I said, it's a weakness. Once you've already placed that trade, bro, you don't need to be checking the trade too often. You can even increase this size. The size of the box, if you want this to show more clearly, you can even increase the size of the box. You see, you can increase that one. You can also increase the size of the box so that if you want the test to stand out, you can play around with it. Lesson learned. The lesson learned maybe for me was just, you know, making sure I take trade not during potential news events. Any lesson you learn during the trade, you are able to write it there. And then before the trade screenshot, I just go on trading view. You can see I have my screenshot tool right there. I just take the screenshot. This is my screenshot. I have a very quick screenshot tool right there. So I just take a screenshot, capture area. It's right there. I copy and then I quickly just come back to my trading there and I put it there. It's already there. Can you see? That was before the trade screenshot and even after the trade screenshot. If I go here, I can minimize this. Or I can put it even as a link. I can put it as a link and then just put the link there. There are many websites you can use to put a picture as a link. You just upload there, you just copy just the link and put it there. So that anytime you click, for example, let me show you an example on this, all right? Remember, there's a lot of things you guys are learning on this particular video. Let's just say I want to put a before screenshot. There's a lot on being a profitable Forex trader, guys. Being a profitable Forex trader doesn't just happen by chance. There's a lot into it. There's a lot. So I want to put my before screenshot. It's supposed to be here. So what I do is, since I don't want to make my spreadsheet very dirty, I want to put the link. So this is a website I use. To me, the website is imgbb.com. You can see I use it for a lot of things. So you just go there, go on upload, and then browse for image. This is the image saved on my computer. The screenshot I took is saved on my computer. This is it right there. Then I just upload, and that is it. Click on upload, and then I just want a direct link. So that's the direct link. I just copy that, and then I put it. I go back to my spreadsheet. If I can close emails, I close tools, and we go back to our spreadsheet. Before screenshot, I just paste it right there. It's right there. All right, it's right there. Meaning, if anytime I want to see, I just come here and I want to see the screenshot, I just click on it. I just come here and I click on it. Can you see? It opens that picture very big. I can be able to see very, very clearly. You can use different method, but this is just what I see that works for me. After the trade screenshot, when the trade has finally played out, I just come here as well and I put screenshot. Then your note, put any note you want. Any note you want, you can write your note you want. You can make this box as big as you can write your note anyhow you want. And then mentor's note. There are sometimes I used to come for Godlove University students. I'll be able to review all their trading plan, then I'll leave them notes. So all my notes will be there to say, oh, Johnny, this is what you are doing. It's wrong. Okay, leverage on this. This is this. You find it right there. Then let's just go back. Let's go back. And remember, this is a software, meaning it calculates everything for you. Let's just say today, the next day you come and let's go back here. Let's just say the next day you come again and this one you made $2,000. The next day you made $3,000. The software is automatically calculating your win and loss for you. It's automatically calculating everything for you. So this is, trading journal. This is part of you. There's even a summary where if you hit on that summary, you can see January, you'll be able to see everything you made in January. February, you can see everything you made in February, the total money you made, and everything is right there. So this is an example of a trading journal. Even if you're not using this one and you want something similar to this, it should be able to have all of this. You have to know what were your entries, where were your exits, what were the reason for you getting into that trade. Was it a win or a loss? You should be able to see everything. Even after 2 years, if I come and I open this trading journal, it's a spreadsheet, I'm still going to be able to see how I was trading 10 years ago or how I was trading 1 year ago. That's a typical example of a trading journal, which I want you guys to be able to cultivate. Let's talk about the last part, the last aspect, which is importance of rest. Importance of rest. Whether you like it or not, you need to be able to look for a balance. You need to be able to create a balanced life. Remember I said my book, Trading in Peace, is going to be dropping very soon. And on that book, I focus a lot on trading psychology. I focus a lot on you creating a balance. I focus on you having a rest when it comes to trading. So incorporate rest period reduces stress and support mental clarity for better decision making. What I'm going to focus more here on is mental clarity. Mental clarity. You need that focus. Forex trading sometimes is the highest profession that brings out the real you. If you're someone who doesn't start something and finish, it's going to show on your trading. So being able to have a rest, you should be able to don't overtrade. Overtrading is something that's going to kill you. If you already have your plan, today I'm only going to take 2 trades. Today I'm only going to take 4 trades. Today I'm only going to take 5 trades. Today I'm only going to trade on this account. If you've taken those number of trades, don't force yourself. Whether it's winners or losers, don't force yourself. You should only be able to use your buffers when you've gotten to that level where you can build that mental steadiness, that mental strength. That's when you can start maybe using your buffer to say, okay, I wanted to take 4 trades, but now I have a buffer. Let me add 2 other trades and stuff like that. Not taking a trade is just another trade in Forex. All right, not taking a trade is just another trade. So you need that rest. Go outside and play some soccer. Go and walk your dogs around. Go outside and have nice time with your family, with your loved ones. Someone like me, I love traveling. I love spending time with my wife. I love spending time with my family. That's why most of the time, I spend more time in planes than even in cars. You guys will see me flying from year to year because I am still making money. I have robots that are built. We're also going to talk about automated trading or automation when it comes to trading. I have automations. I have robots like Payouts Pro that even when I'm not on my chart, even when I'm on flight, even when I'm flying here and there for seminars, for events, money is still printing. Money is still printing because I already understand the importance of rest. So that is very, very important. Remember, I'm trying to build your psychology that will enable you to succeed with prop firms. Good. Let's talk about infographics on traders' psychological tips. Remember, we're still talking about psychology. You need to build that psychology of a trader. Mindfulness practice, all right? Mindfulness helps traders stay present. So mindfulness is very, very important and it helps traders stay present and focused, reducing impulsive decision making. Mindfulness, for me like a Christian, for me like someone who is religious, it's just meditation, it's just calmness, it's just prayers. I start my day by offering my day in the hands of God. I start my day by praying, by just telling God that whatsoever that happens for today should be according to your glory. Whether I make money or not, it should be according to your glory. Whether I have losers or winners, it should be according to your glory. And whether I have losers, it should be, maybe there should be lessons you want me to learn from those losers. I start my day, that's mindfulness. It gives me calmness. It puts my mind at peace. Even when I'm not winning, I'm still at peace. That is what we call mindfulness. Recognizing emotions, so emotional awareness. You need to be aware. You need to be aware where your weaknesses are. You need to be aware of your weaknesses so that you can work on them, and your strength so that you can leverage on your strength. So emotional awareness. Recognizing emotions during trading improves decision making and helps manage risks effectively. So recognizing emotions, whether you like it or not, you're going to go through emotion. Like I said earlier, you're risking your hard-earned money, bro. You're not risking bananas. If you are risking bananas, like I said earlier, you wouldn't have a problem. You'll be a very good trader. But since you are risking your hard-earned money, you are risking l'argent. This is l'argent in French, right? L'argent. You don't know in your language, how do they call money in your language? But we are risking l'argent. This is l'argent we are risking. We are risking money, and whether you like it or not, you have emotions involved. It's learning how to control or completely eliminate those emotions that will make you a profitable Forex trader. Now, we also talk about routine building. You need to build your routine. How do you start your day? Do you start your day by mindfulness practices, by meditation, by praying? What is the routine you follow? What time do you document your trade? What time do you take your trade? You need to have a routine you follow. You don't just do things haphazardly and think you're going to be profitable in Forex trading. Good. I hope we're going somewhere. From challenge to payout. You guys have all been waiting about this. Navigating the final steps from challenge to payout. Before we go there, just for some motivational purposes, what is a payout? A payout is our goal at the end of the day, where you start seeing those emails saying your payout has just been approved. Your payout, $10,000 has been paid out, $24,000. I think this was actually $24,000 back in 2022 or 2023, bro. So we have stayed. We have stayed in this thing, and we've seen the good, the bad, and the ugly, and that's what I'm trying to help you guys. This was in 2022 with 2023 or 2023, I guess, with my Forex fund, back one of the first pro firms in the game, my Forex fund, and I was already getting $24,000. I was already getting $18,000, $6,000. Funded next, 2023 as well. That's what I'm saying. If you can follow my channel, I have documented everything on this channel, and I've gotten more than $500,000 across more than 50 pro firms I have traded with. And you can see those are just the pictures I've just been showing you of this payout. I've printed some of them in plaques. You see, there was even a time I printed this one on a plaque. This is a payout right here. You can see the amount. That's a payout, $15,000 printed on a plaque just to motivate myself. That's it right there. I've printed plaques. I have my office are full of some of these plaques. These are payouts, bro. These are payouts, and they're just there for me to look back and say, oh, I did a good job. I followed my plan. They were all justified winners or justified losers. I'm progressing. There is progress. So you're going to get there. I believe in you. I trust you're going to get there. I believe in you. You just need to believe in yourself that you get to the same level where you start getting payouts like this. You start printing some of these plaques to put in your office, to put in your room. I believe in you, and you watching this video, trust me, you're going to get there. And my channel is here to hold your hand till you get to that point. So let's see what we got. That's why I'm talking about reviewing and submitting your challenges, your challenge result. You need to be able to review and submit your challenge results. So thorough review, carefully examine all trading records to ensure they are complete and accurate before submission. So that's why I'm just saying before you can, so this is mostly for Godlove University, right? Because at the end of the year, course, they are able to trade for 10 days on that trading journal. Then after, I am supposed to go through like a mentor, and I'm able to leave my review. I'm able to do all of that. And again, this now on your side as a trader is when you are at the final stage where you need to do your KYC. So at this point, you need to make sure you've hit your target, you didn't breach any rule, and that's why you go to compliance check. Compliance check is when you do your KYC to know, so that they can know that you're not a scammer, so that they can know that you're not trying to do KYC fraud, you're not trying to do IP fraud. So you obviously do your KYC check, and then preventing delays. To prevent delays, make sure you do your KYC on time. Make sure you submit correct record. Ensuring accuracy in your record helps prevent delays or rejection when submitting results to the firm. Result just stands for KYC. Just for your KYC, make sure just your ID. Even when I sit here, you can see I'm not going to be showing too much details, private details on the video. It might be, YouTube might not like that, but this is my ID card. It's right on my table all the time, so that anytime I want to verify my account, it takes a few minutes and I have verified that particular account. Complying with verification steps and firm guidance. It's it sucks when you've done all this hard work, you've watched this video, you've done everything, then at the end of the day, your pro firm rejects your payout. I know it sucks. I know it sucks. That's why I'm taking this particular step to see again, talked about complying with verification steps and firm guidance. Verification procedure. Adhere strictly to all verification steps to ensure accuracy and security in a qualification profit. Just follow the rules, bro. Just follow the rules. Submit this picture, do your KYC to prove that you are the one. And most of these firms, particularly funding peeps, which I'm recommending, and like I said, I'm going to give you guys a very attractive code at the end of the video so that you can get a big discount with funding peeps. So for them, their KYC process takes seconds and you are already verified. Trading activity review. Conduct thorough review of trading activities to comply with firms' policies before granting access to funding. Now, different firms have different rules. Some of them have consistency rules. Some of them have delay rules. Some of them have IP rules. Some of them have there are many rules. Some of them have even regional rules. Count this one, lot size rule, stop loss rule, tip. There are different kind of rules and even hidden rules that some pro firms might use just to deny you a payout. So just make sure you are aware of these rules, and being aware of some of these rules will help you avoid some pro firms. And a pro firm that stands out with clear rules, transparent rules that you can use, it's obviously Funding Peeps, which is on the video I did about the best pro firm for 2025. Funding Peeps was there and they have very transparent rules. A pro firm that has paid out more than 160 million to traders. I want you to be part of that 160 million, bro. I want you to be part of that to get your own share of that cake when it comes to the Forex market. Access to funding, voila, now you are funded. Now you are approved. Now you are funded. Now you've gotten a payout. Now you've gotten that email that says payout of. So successful compliance with verification and guidance enable final qualification and access to funding and subsequent payout approval if you make money with what? If you make money on that your funding account. So showing, this is a flow chart. I wanted us to do this flow chart together. So this flow chart just shows the journey from challenge to payout. Obviously, it all starts here. This is you, the trader. All right, this is you, the trader. And assuming you take a prop firm like Funding Peeps two-step, which two-step I recommend because the rules are more flexible. So obviously, you'll be able to start with phase one. I call it phase one, which you need to make 8% on phase one to pass that challenge. Let's say you pass the challenge. Obviously, they will give you phase two. I call it P2, which you need to make 5%. Now, if you fail this phase two, you fail the entire challenge. If you then pass this phase two, what will happen? You then go down to, I would have continued this side, but you go down to what? A funded account. A funded account, I call it FA. So now you go to what? Funded account. You see this. From this funded account, you trade on this funded account. There's no limit on there's no profit target. So let's just say now on the funded account, you make 5%. You can even your first payout should be very small to kick the momentum in, to kick the payout momentum in, to kick the payout momentum, and to train your brain to receiving money, to train your brain to receiving payout. So your first payout should even be as small as 5%. As small as 5%. That will tell your brain that this is possible. That will even tell you yourself that, oh, Johnny, it means this thing I'm doing is actually possible. This is money. From my $100,000 account, I have made $5,000. It means this thing is possible. It means Mr. Godlove hasn't just been wasting his time. It means this is real. So don't go for a very big payout. Start with a very small payout, say 5%. And even if the prop firm is keeping 80%, let's just check, you check bi-weekly. Bi-weekly with the funding pips, you keep 80%, right? You keep 80% and the prop firm will keep 20%. So let's just say you even taking by 80% on $5,000, it means you keep about $4,000. How much did you spend on buying that $100,000 prop firm account? You always spend $500. $500, and then you've gotten a payout of $4,000. Remember, at the beginning of the day, I say always treat prop firms as a business, where as a business, you always consider your ROI, your return on investment. How much do I need to be able to invest to be able to have a return, to be able to have a profit? And in our case, you can see we only invested $500 and we ended up making profits of $4,000. So our return on investment, it's almost about, it's more than 500%, because our profit here is $3,500. You can then use this $3,500 to buy even $1 million worth of prop firms. If in that $1 million worth of prop firms, you are able to now we're going to go to the scaling process. Don't worry. In that scaling process, I'm going to show you guys how you can start from a $100,000 prop firm account and you go right up to $1 million. Don't worry. This is why it's called a mini course, because I don't want to miss everything. I want you guys to have everything. All right. So step-by-step process is what I just explained. Clarification, expectation. Be able to have clear expectation at every step. And then challenge completion to pay out is just what I just explained right here. So let me look for a whiteboard so that I can just show you guys how you can go from what? How you can go from $100,000 or from $50,000 or from $10,000 to $1 million. I'm going to use $100,000 to $1 million, right? So that you guys can see. At this point in time, you've known how to pass your challenge. You've known how to go from challenge phase to payout. You've gotten that payout. How do you scale to millions? How do you move from trading with a $100,000 account and next thing they want to see, you're already trading with $1 million. You're already trading with $2 million. In 2023 alone, I went from almost about $200,000 to $4.5 million using the secret approach I'm going to be showing you guys here. All the videos are on this channel. It's not like I documented everything. That's a good thing with documentation, all right? So that you can always go back to see your progress. So the system that's going to allow you to scale from any amount to millions is called the 50, 10, 50 rule. The 50, 10, 50 rule. And what does this 50, 10, 50 rule means? It means the first 50, it stands for percentage. 50%, 10%, and 50%. All right. The rule states very, very clearly. If you are starting with prop firms and you can only afford to buy a $100,000 account, I want you to give yourself a room for failure. Meaning you should start by buying 2 prop firm accounts. All right. We're going to use $100,000 account, for example. Meaning you start by buying 50K and another 50K. Why are you doing this? Because you want to give yourself a room for failure. Remember, we are starting with someone who can only afford to buy $100,000. You only have $500 to buy a $100,000 prop firm account. Don't just buy that $100,000 account. Give yourself a room for failure. I want you to buy 2 prop firm accounts, one $50,000 and one $50,000. Right? Our goal at this point in time is to get one of them. Let's just say one of them you're gonna fail one, and our goal is just to get one funded. This is the one that is funded, and now you have a 50K funded account. From this 50K funded account, there comes the 10%. I want you to now make 10% on that 10% on that 50K account and request a payout. You can still stick it. So this one is either 10 or 5. You can make 10% and request a payout, or 5% and request a payout. I'm just going to use the maximum, which is 10%. 10% from this our 50K, which was the one. Remember, you failed this one and then you got this one funded. You're giving yourself a room for failure. Like I said, you will face some of these challenges, right? The one that is funded, target 10%. 10% of $5,000 is what? I'm using an example, prop firm like funding people. 10% on $50,000 is $5,000. That's $5,000, right? Your take home from here, the prop firm keeps 20% while you keep 80%. If you keep 80%, it means your take home here is what? Is $4,000. That's the amount you're going to take home, $4,000. Now, from that $4,000, there come the last 50%. On this 50%, which I want us now to then split it into two. This 50%, it means that payout you got, I want you to split it into two. The first one is your private brokerage account, private account. And then the second one is to do what? Is to buy more props account. So 50% of this, at the beginning of this challenge, you're not going to waste any money. You're not going to buy any dumb shit. You're not going to waste any money you're making until you get to where I call the break-even point before you can start wasting your money, right? So at this point in time, 50% of this, meaning $2,000, you put that on your private account. Remember, the goal for prop firms should be to build your private account so that even if you stop trading with prop firms tomorrow, you can trade on your private account that you can control the rules you want. All right? That's why before I got almost about $400,000 in payout in 2023 alone, the goal was just about $200,000. It was in my private brokerage account alone. $200,000. So at this point in time, $2,000 will go to your private brokerage account and $2,000 will go in buying more prop firm account. With this $2,000, you can buy two 200K prop firm accounts. Two 200K, because one 100K is $1,000. Meaning you can have now 200K here, you can have 200K here. And the whole circle starts again. Now, let's just assume you fail this one. You fail this one, and then you pass this one. You pass this one again, you go back to 10%. 10% of $200,000 is, yes, 200K. 200K and 200K. 10% of 200K, the one you pass is what? Is $20,000. $20,000. You go now back to this 50%. This 50%, now 50%, let's just assume your pay is 80% is $18,000 and your pay is $18,000. 50% of $9,000 of $18,000 is going to be 9K and another 9K. Meaning this 9K goes back to where? Goes back to your private brokerage account, and this 9K is expected, listen, is expected to be used in buying more prop firm accounts. But at any point in time, don't buy prop firm accounts, don't invest more than $2,000 in buying prop firm accounts. So here, $7,000 will go back to where? Will go back to my private brokerage account, and I'll only use $2,000 again in buying $400,000 worth of prop firms. You see, so now what is my private brokerage account here is $2,000 plus $17,000. So in my private account, I have $19,000 now. I have 19K in my private account, and with my prop firm accounts, I still have this my $50,000 plus this my $200,000. I have now plus this my 200. I have now $250,000 in funding, and I have just purchased again $200,000, and the circle continues. The circle continues. Before you see, you're already on $1 million. You're already on $2 million, $3 million, $4 million. It just never ends, and it's so interesting when you follow this approach. We all started with $100,000, and now we are already on $250,000 funding with almost about $17,000 in payout. At this point where 50% of your payout is above $2,000, I call it the break-even point. So after your break-even point, part of your payout, now you can start buying your car. You can start buying those cars. You can start buying those Versace. You can start buying that dumb shit. Pay yourself. You have the right to do that. You've made the money. You can start buying. You see, most of the time, you see, before I start buying those cars and doing, I make sure I get to that break-even point. You get a point? You get a point? Good. So that is it, guys. That's it. That's how you go from $100,000 to $1 million, from $10,000. If your case is $10,000, then $10,000 for me is so small. Start with something reasonable. You can start with $50,000 where you buy two 25K prop firm accounts, and then you just follow the approach. So we are almost coming to a conclusion of our mini course, and preparation is very important. True preparation is essential to navigate prop firm challenges effectively and increase success probability. You need to be prepared. Proper preparation prevents poor performance. Part of preparation is why I've been doing what I've been doing, why I've taught you guys this mini course. Discipline and consistency. Maintaining discipline and consistency in trading strategies help manage risks and achieve long-term goals. We've already spoken a lot about discipline, then effective risk management. I can't even talk about this one because everything we've been talking about today have been about risk management. Then applying proven strategies. Check out GUMVRO on my page, on my channel. That strategy we have. You guys saw the testimonials of that strategy. And then you can also check out GUORB, bro. Check out GUORB. It's still doing wonders. Also check out my support and resistance strategies and all of that. I won't also finish without talking about, Godlove University, because I know you guys were like, no, I can't get all this information like this from this guy for free. How come? Yes, I've given it to you guys for free so that you can be able to create wealth through Forex trading. If you even want to take it more serious, you can enroll in Godlove University, where you will be together with almost about 5,000 students whom I am mentoring, and they are able to trade profitably. So just head over to Godlove University. You'll be able to see the link on the video description. And on the Forex course, I'm just going to show you guys. Let's just quickly go through the Forex course. So on the Forex course, this is just, it can start from monthly. You can start from as little as $125. You will be able to be my mentee, where you have a structurized course you take. We'll have Zoom sessions together. We'll follow up your progress to make sure you are succeeding. You can start with monthly, quarterly, or the yearly subscription to be part of Godlove University. The course is divided into beginner, intermediary, and advanced lessons, and each of it is going to make sure you comprehend and understand it 100%. The course is divided each level is having about 30 to 45 lessons. It's having quiz, it's having, lessons, live video lessons, it's having tutorial. So this is this is a place you need to belong. You'll get a certificate that looks like this one. I'm going to put it even big on the screen for you guys to see. And this is an accredited certificate because Godlove University is accredited. We have all the requirements and the certification to give you guys education on Forex. So this is a nice certificate you're going to get to pride yourself to say, okay, I was able to go through the course. We have a mesh, you also get a mesh in the university. This is the Forex community, and you can see there almost about 5,000 students who are in the Forex community. You can just go here, check out the testimonials of everyone. Just put a screenshot of the testimonials themselves so it doesn't sound as if maybe I'm just typing them. These are the screenshots of the traders, which in the private community, you can talk to the traders themselves. And still part of Godlove University, Godlove University, you can see, just look at the curriculum here. You just have an idea on what you're going to learn in the community. So one other product which Godlove University offers is a product which has won 4 years in a row as the most profitable and the most viral Forex robot, known as Payouts Pro. I just gave you guys my recommended prop firm, which was Funding Pips. They allow you to use your robot without any issue. So if you want to use Payouts Pro, just head over. Again, check the link on the video description. Don't buy it from any website. You're going to be buying the fake, scam, pirated version, which they can use to steal your info. So buy it directly from Godlove University/Payouts Pro, which you also find the link on the video description. You can start with the monthly license, the quarterly license, or even the yearly license. You can see the performance of the bot taking $1,000 to $23,000. And even the FX book. Most of you guys this is the FX book link. For those of you guys who want to doubt, you can go on FX book and you also be able to see the results of the robot. Most of you guys also wonder which private, remember I mentioned the main reasons you should be trading with a private account or with a prop firm should be to build your private account. So which private broker should you use? Click the link again on the video description and you'll see my recommended brokers. That's where you should be able to sign up and use them as your private broker. Meaning when you make your money with a prop firm, you are very rest assured that as you're depositing it in your private account, you will be able to make money and withdraw and have screenshots like this without any issue. I promise you guys I was going to be giving you guys a discount for the best prop firm of 2025 or best prop firm of 2025 going to 2026 at the end of the video. So just click the link on the video description. It's going to take you to Funding Pips and use the discount code Godlove at checkout and you get 20% off in your discount. That's all coming from me. I was able to negotiate this for you guys and make sure you take advantage of this. Meaning if you were to pay $1,000 for a 200K prop firm account, you only pay $800 thanks to Godlove. So use the discount code Godlove at checkout, and you have a whooping 20% off. The link is on the video description. I'm also going to leave it on the pinned comment section of this particular video. Make sure you are part of my free Telegram community, because we have a lot of challenges that are going to be coming up in 2026, and I want you to be part of my Discord community, also part of my free Telegram community, which you're going to find the link on the video description, and you don't miss out. Check out the links that are going to be coming at the end, the videos that are going to be coming at the end of the screen, because those videos are still going to be able to motivate and prepare you to win at Forex. Click here to subscribe to the channel if you haven't done so, and I will see you guys on these other videos. Make sure you go and watch these videos as we speak. Let's go. Peace.